Walton, and we are joined with Walton-Winn. We are the Walton-Winn team at Keller Williams, and we're so excited today to be joined by three fantastic mortgage representatives that are preferred partners with our Keller Williams office in Doylestown.
Mike White. I'm area manager, Developers Mortgage, and we are a preferred lender, as you said, with Keller Williams Doylestown. I have about 30 years of experience.
Hey there, I'm Paden Amsden. I am partner to Mike White, the White Amsden team with Developers Mortgage.
And Jason?
Hi, I'm Jason Colbert with Presidential Bank Mortgage. I have been in the mortgage business since 1992, sadly. That makes me feel old, but I'm here to help in any way I can.
Kelly, you want to kick off some questions?
Sure. So thank you for joining us. How has COVID-19 impacted or changed the mortgage industry or process from your standpoint?
Sure. There's been quite a bit of changes. This crisis is a bit different than others, so it's affected the products. Anytime you have a geopolitical event or a war or something, today we have COVID, there's a credit tightening. And credit tightening has happened to about 25%. The good news is the vast majority of customers in our marketplace have lots of options, and it shouldn't have much of a negative impact, but jumbo lending has been greatly restricted. Conventional lending, which is the most popular product, is actually very stable, and rates are extremely low and attractive. FHA, VA, USDA, the government loan programs, the lower credit scores below 640 are difficult to finance. Down payment assistance programs are offered by lenders are greatly reduced, but the grants by your local townships are available. Stated income products, things like that are tabled for the time being. Renovation lending, a lot of lenders have also put that product on hold. Settlements, as you know, people are attending settlements what I think is very safe. Here at Developers Mortgage, we're fortunate. We're one of the very few lenders in the state that is remote online notarizations.
So Jason, we talking with buyers right now that are hesitant to move right now. They're on the fence. Should they wait until next year? What's your advice in that scenario?
Yeah, so I hear that all the time too. My advice to that is, find out why they're hesitant, if they're worried about their job or if it's just the overall impact of COVID and they're just kind of concerned about maybe going into houses or concerned about the overall market in the future. The conversation I'm having is, what is the cost of waiting? So if you decide you are going to wait, you understand what those costs are. I talk to people about where rates are. We're historically low with interest rates, and they will probably be there for the rest of this year in that lower level. What I like to talk about, and if you want, I can share my screen here because I put together a cost analysis. Here's the current market. If you look over under the summary section, I highlighted here. If somebody were to buy a house today at $550,000 and the rates are somewhere around 3.25%, and they did 10% down, so this would put their mortgage payment, and I estimated numbers. I put in here, I put in $600 a month for homeowners or for taxes and $115 for homeowners insurance. So that would put their total payment at $2,885 in this scenario. So what I compare that to is, what would that look like? Let's say a year from now they did wait and rates went up a little bit. They went up to 3.78, which, by the way, is still historically extremely low and an excellent interest rate. But it will cost them a lot more money by waiting. And maybe the values, we expect values, while they have shrunk down or not have grown. I don't even know if they've shrunk. The projection is they're going to not grow as fast this year as we expected to 2-3 months ago before this all hit. But by the end of the year, year over year, they project to be maybe 1% up to flat for the year. But then in 2021, prices are expected to start going back up again. Values, let's say it only goes up 2%. We're at or somewhere around there, not even 2%, $560 for that same house. So it went up $10,000, but the rate went up. Look at the difference here between the two payments. Now you're paying for the same house, you're paying $3,102 instead of $2,885.
Wow.
So that has a significant impact on it, and not just on a monthly basis. You look over time, over 10 years, and what that cost is. So you can see the total cost for those two same identical houses can be significant. So you're talking tens of thousands of dollars in difference, just if the interest rates go up. But even if the rates don't go up too much and the cost goes up, or the cost of the house goes up, it's still costing you a significant amount more money. So that's why when we have that conversation, that's something that I like to point out to people, what that cost is, so they truly get what the financial impact of that is.
Right. No, that's fantastic. That's a great visual for people to see.
So you're overall saying, don't wait. If you're on the
I would
fence,
absolutely not wait.
you're probably saving yourself more
unless
money.
unless there's a specific reason where maybe you did lose your job,
Right.
or you have a high-paying job that you're really concerned that's not going to be there. But that's probably not the case for most people, because those are not the industries that are really being impacted as much. It's the industries that are being impacted are restaurants and bars, and those buyers are typically the first-time home buyers. And if they're impacted that way, then maybe they need to put it on hold. Maybe they don't have a choice. But if somebody that has a choice that doesn't have has not had an impact from a financial impact from the situation, then that would be crazy to me. It would be nuts to give up this opportunity, because this is an opportunity that we may never get again, to buy houses at these low rates.
True. It's an upside of it.
Yeah.
So
and the market has been strong.
it has been.
Throughout
So
this.
that's good.
Well, we also expect demand to continue to be strong, because you have just a lot of buyers in the market, and that's why we don't think real estate is going to suffer that much as far as values. We don't think values are going to really drop much. It might have slowed down for this quarter, but going forward, when things start to open back up again, there's such a demand for housing that we just don't see that being a problem.
Next question is for Paden. Paden, where do you both see the interest rates going over the next few months?
We're probably all in agreement here that they will continue to remain at or near historic lows, as they have for some time now.
Right.
I think the bigger thing to point out here to everyone is, even though we're going through unprecedented times, the markets do remain very strong. Lending remains very strong, especially on the conventional side. And just speaking from us, most of our business is conventional anyways. And with that conventional business, we're seeing a lot of property appraisal waivers lately, or drive-by appraisals. So that's helping up to ease the start to finish process there.
Will that change, Paden, do you think, now that the restrictions have been lifted? Or do you see that being a new wave of the future?
What are your thoughts on that, Mike? Do you think that'll get pulled back once we get back to normal?
I think that once we get back to normal, but not until we're out of the phase, into the yellow phase.
Right.
I don't think that waiver or drive-by will go back unless there's perceived higher risk in the markets.
And the nice thing about it, if all of these items stay the way they are, it's making the process easier for borrowers, for us, for everyone involved in it.
Right.
Take advantage of that. So that's good.
What are you seeing as your favorite programs right now? I guess, Paden, if you want to continue a little bit.
I couldn't say I have a favorite. Like I said, most of our business is conventional. There's a lot of options within that conventional range as far as low down payment goes. Prior to COVID, we were using a lot of the down payment assistance program. Also a conventional product that piggybacked a second loan on there. We do expect that to come back. All of our government products, FHA, VA, USDA, we really use whatever fits the customer and their situation best.
Mike, do you want to piggyback on that?
I think right now a great program, well, I think always a great program for the greater Doylestown market is USDA. Most people do not realize that the map around Doylestown greatly includes USDA territory. So this is 100% financing. It's government financing. Typically, if you have a decent credit score, you're going to get a really low rate. So seller can pay almost all your closing costs. So, I mean, you can still do this today. There's income guidelines for it, but they're pretty high. So this program has not been affected. And Doylestown, they changed the map like a year or so ago. Most people don't realize you can get 100% financing. So,
Mike, for people that don't know what USDA is, what is just briefly the main component that they need to qualify for that?
Well, USDA is a loan program that was designed to help lending in rural areas. So it's a little surprising to me because I don't necessarily think of Greater Doylestown as rural, but it was designed to help people buy homes with no money down in rural areas, which was often very difficult a while back. So it's a government loan program. It's run by the U.S. Department of Agriculture, of all things.
It is a phenomenal program. We had a client last year that took advantage of it, and it was one of the first times we had come across it, and everything was covered. It was phenomenal.
It was amazing.
So,
Yeah. That's an awesome.
And there's no limit on the purchase price with that. The only limitation is the income. And like Mike was saying, the income limits are actually quite high on USDA loans.
Jason, thoughts on a
Yeah,
favorite?
so every program I love because that means it's a buyer, but it just depends on the market that we're looking for. So first-time buyer programs, my favorite one is one of those USDA loans, but also what we offer is loans through PHFA, that's subsidized through Pennsylvania Housing Finance Agency. So they support all those programs. They support a 100% down USDA or 100% financing USDA loan program. They support an FHA loan program. They support a 3% down conventional loan program. And they also have a up to $6,000 grant. So there's a great programs for first-time home buyers. We have a really good jumbo program. It's a 10-1 arm, especially in the environment we're in now, because as Mike said earlier, the non-conforming market has kind of tightened up a little bit, and the pricing's gone up a little higher than where it used to be. So an alternative to that for us is the 10-1 arm, because we'll blend up to $1.2 million on that, and it's 3.25% that interest rate. So really good alternative for the jumbo market. One of the things I love about our portfolio program, so we can do some mixed use stuff with it, like the shore. We do a lot of shore properties down in New Jersey. So a lot of those houses are condos, and like in Ocean City, for example, you'll have a storefront on the first floor, and then the second and third floor are the residential units. That's a program that I love. It's really easy to do. It's because it's also, there's common sense underwriting. So it's not like a black and white thing where if it doesn't quite fit the mold,
Right.
you can't do it. It's an actual underwriter. It's underwriting it and saying, okay, well, this makes sense. Let's push it through.
Looks at the whole picture more so,
Yeah, exactly.
which is great. We really appreciate you hopping on with us today as we come out of this quarantine COVID pandemic and back into the wild.
Yeah, I'm just happy to see that everybody is able to go back out and show real estate, because it's kind of been ridiculous that you've all been held back this long.
Agreed, Jason. Agreed. Yes.
So it's been very frustrating to watch it. So I'm glad that you are all able to get back out and do what you love to do.
Jason, us realtors don't really cook that much, and now I'm cooking like 3 times a day. I'm done. I'm ready to go back out into the wild, as Jen says.
Back out into the wild. Well, thank you so much, everybody.
Thanks, guys.
Really appreciate it.
Have a great weekend.
See you soon. Yeah, you too. Thank you.
Happy Memorial Day, everybody.
All right, bye-bye.
Bye.